friends, this is Martin from Secrets, the channel for about trading and investing. Welcome to the brand new episode of Markets from our daily market analysis that we do, where we look at what happened in the markets and then try to make a better trade plan for the next day. So, how is the market today? The bears are hit back again, and it's an expiry day that's tomorrow, right? So, we'll analyze what happened. If you're not subscribed, please subscribe and share difference and produce with everyone benefits. So as usual, we'll be doing the PreMarket analysis for November 25th, Thursday and expiry tomorrow. We'll be looking at all of these things that you see on the left side. These are all different parameters, and we would also have additional data analysis on all of these items that you see on the right side. So here we have the charts. Wide range bearish candle on the Nifty left side, and a green close on the BANKNIFTY, but it's an inverted hammer, a small body candle. So that's inverted. This is not a doji because the real body of the candle is a little bigger than a doji. Doji is just very thin. This is not that. So it looks like a hammer. It's not a perfect hammer because the big size is a little extra. But it looks like a hammer. Hammer on a downturn may indicate a reversal on the upside. This is bearish. This is pure attempt to break out and then failure. It's a bull. You can say it's a bear trap. Right? You try to be more bear. It's a bull trap actually. You try to be bullish, but it failed and then again went bearish. Right? It's a bull trap. It trapped the bulls basically. Bulls might have went long the moment it went down the previous day's high. So what we had? So we had a 0.5% fall in the Nifty. And that's a failed attempt to bounce, to continue, from the previous day's bounce, right? BANKNIFTY was an inverted hammer. You can see that. BANKNIFTY closed green, and it just gained 4%. Whatever Nifty lost, BANKNIFTY gained, but it had gained a lot in between. But yeah, so as I said, the inverted hammer could be a signal of a trend towards. We'll never know, right? So it closed below the previous day's high. That's something just below, just for 1 or 2 points, right? And from the inverted candle. So intraday, if you see, it is 120 points up and then 250 points. Double that. It attempted to go up and then fall down double. That's what happened afternoon today in Nifty. BANKNIFTY, it attempted to move up and then made a V-shape down. It's perfect V-shape, right? 1.5% up, 1.5% up, and 1.5% down. So this is overall bull trap is what happened in both indices. But BANKNIFTY held down to close green. It is more bullish. Already the expansion can be seen clearly that it's on the bearish side. That's why the higher bear distance from the median to the downside and upside, you see it's wide. That's why you have wide expansion is happening. So clear bearishness on Nifty and BANKNIFTY also, right side BANKNIFTY. Now let's look at support. Intraday, this is what happened, right? It tried to move up and then gave up double of that. Tried to move and then gave up everything. Then it had gained. Support resistance levels, you can see where it is at the support zone. Nifty. It had bounced from the support zone of 17,250 to 17,200 levels, and that will be the first support now. If it falls back there, it will be a retest of this. So if it falls back from there, it's 17,000 and 17,150. If it falls from there, 16,900 is kind of Fibonacci support levels, and after that we have gaps about 16,700, 750 that range. And upside you have the resistance of the previous swing low level of 600, 650, where it got resistance again and then fall down. That's the first resistance call, and after that you have 850 levels, 800, 850, then 18,000 levels. That was at 100, 200, and 400, and then 600. So far away resistances now. BANKNIFTY on the other hand, it actually retested the levels. It continued the bounce today. So this first support on the downside will be 36,900, 37,100. So 37,000 will be a support zone, and if that goes, then 36,600 will be the support zone. If that goes, you have a support at 36,500 and then 35 600, 35, 900 that range. So our previous swing lows. Then we have 35, 300 and 35,000 range. 35,000, 36,000 and 36, 500,000 and then 36, 600 level and then 37. So these are all the resistance in the downside. Upside, if this it is 37, 800 is where it met with the resistance today and then fall down. That's the first resistance upside. Then you have 38,000 which is the next resistance. Then you have 38, 500 which is the next resistance. After that you have 39,000 kind of levels. These are all previous resistance zones. Then above that you have 39, 500 levels. Then 40,000 levels. Then 41,000 kind of levels. And 31, 800 levels. So the resistance from the upside fall. It's a big fall that has happened so far. Okay? And correction of 7,000 on Nifty and 12,000 on BANKNIFTY has happened. Attempted a bounce yesterday. It continued in BANKNIFTY today, but met with the resistance. Nifty could not continue. It closed much below previous day's close and also met with the resistance. That's a summary of what happened. Momentum divergence. So this is interesting. BANKNIFTY has got a 3-bar bullish divergence where the momentum is rising up and the price is falling down. This is 3 bars, so it could work out. It is not confirmed. It's confirmed only after it is moving above the previous day's close. So it is confirmed it is going to be big recovery into the sideways at least. Right? That fall may be arrested here if it works out. Now BANKNIFTY, it's still in the bearish zones of momentum. You can see our daily short-term candle we are talking about. There is no divergences. Right? But both of them as of now the momentum is in the bearish zones, Nifty and the BANKNIFTY, but time to the advantage of it. There is a chance of a bounce because of the bullish momentum divergence. Trend indicators are bearish on both, and the bearishness is increasing indicated by the green ADX and DMI negative is dominating in both indices. Okay. And the weekly trend indicators are also showing the crossover, very close to a crossover. The crossover happens, it will be confirmed on the medium term also. The trend is bearish. As of now, it's the short term that is bearish confirmed. And volatility dipped again. It's true mean reverting. It is hovering around this 15-19 range perfectly. It did an 18% and a further 5% up moves last week. And this week earlier, and now today it dipped 5% and it's at 70. Huge volatility was there across, right, because of this up and down moves, because of this range. So already dipped is what happened. But market also dipped, so it may indicate that there is a chance for reversal. Because normally when market is moving down, then VIX should shoot up. But today VIX fall down. Markets also fall down, right? So anyway, it is hovering within that range. Higher volatility can be expected. Tomorrow is our expiry days, monthly expiry, so choppiness will be there. Expect that, and then be very cautious to have stop losses put in the right way. Open interest data is showing, this is also very interesting, it's matching with the charts. The highest open interest on the Nifty is seen at 17,000 and then 17,300. So 17,000 is another 400 points down. So resistance seen at 17,500 also, all writing is there, but highest is the 18,000. So it can be either way. Monthly expiry, it can. So definitely 18,000 is far better. It's not going to happen from 17,400 levels to 600 points. Not going to happen, right? So the fight may be to retain 7,500, and downside the fight may be 70. So the fight will be between 70. So you can clearly say that 70,000 to 7,500 is where it's going to happen. So if 17,200 retest is attempted and the bounce it is happening, you can go up to 7,500. Or if 200 is given up, then 7,000. So that's the kind of moves again. Now BANKNIFTY 37,000 and 36,000 is the highest trade. 38,000 and 39,000 is by the highest. All writing is resistance is right. So that's the kind of moves. So 37,000 was maintained today, whether it will be able to ongoing 38,000 where it faced the resistance today. No, that is what matters. Or would it give it to 37,000? 37,000 was protected pretty much, right? So 0.8 is bullish. The Bank Nifty charts also showing some bullishness, and Bank Nifty or the put correlation is also showing 0.8 put correlation. 0.5 is what Nifty is there, which is not that bullish. And we have a long build-up seen in the Bank Nifty today, and a short build-up that is seen in the futures or builders data. Sectoral performance is as usual bad. None of the sectors are performing. IT gave 1.5%, metal and momentum is bad. We had to wait in the short term. Metal is close slightly green, but momentum is bad. Auto 1.3% down. Momentum is bad. Pharma 0.5%, not up, 0.5% down actually. Momentum is also bad. FMCG closed red, 1.1% down. Reality also red. No? So all of this short term momentum is lost. Some of them so sectors like FMCG and pharma, it is in the bearish ones, the short term. Right? Some others are in the sideways one. So now sectors are taking a long position really. Probably you may find some stock specific, but sector wise, if you see, all sectors are bearish. Institutional participation is a shocking thing. 5,122 crores of sales happened for institutions, and domestic institutions managed to buy big 3,800 crores of buying. It's having, which is optimistic, but affairs are not stopping. 23,000 of crores of selling happened in the month. Is still has one more bit to go. And previous week 25,000 crores already. So 50,000 crores of selling is happening in just 2 months. Limit by the Fyers. So big money is being pulled back from the market. This is a concern. Now index, you can see that it's hovering around the support zone, and it's not. It was kind of a spinning top or a small body movement that happened bearish, and it looks like it is attempting, and it wants to move along with the dollar index that you see on the right side, which is breaking out like anything. So there's a 52-week high that is made once again in the US dollar. So US currency is becoming more strengthened, but this is mostly constitute the European dollar power and not the US currency pair. But some impact can also be felt here on our market. Eventually, it will impact. The dollar is strengthening. Obviously, the rupee would be weakening. So, crude oil has cooled off, and it had fallen decent and below 80 to 75, 76 levels, but it has shot up in the last 2-3 days. It was kind of indecisive movement at the support zone. So, the momentum is also catching slightly, and it may be conserving at this phase, or as long as it doesn't move further up from the 76 levels, it may be okay, even if it is not cooling down further below the 75. So here the charts got repeated for some reason, but essentially I want to show you the Vauld chart. So what happened in Vauld is today you can see that gold is facing resistance the last 2 weeks. Right, so gold price is dipping, the dollar is strengthening, so obviously gold will lose its might, but overall it's a medium term, it is a cup and handle breakout that is happening in the gold. So overall it's bullishness. It is broken out of the channel also, but face resistance at this zone and then fall back. Right. So two bearish actionables. One is Bajaj Auto, which is just put last week also, and it was given already 5% in 3 days. I tweeted that, and also I think it included that in one of the daily analysis. So that Bajaj Auto is bearish, but because of the reason that the daily momentum is bearish, ADX indicator of the trend is bearish, and chart patterns clearly open the long support zone also, and there is a end pattern breakdown that is just begun, and it could, there is some fundamental bad news also there. Investment bank fundamental bad news is there. In addition to that, it's bearishness that is happening with gap, huge bearishness. The momentum and the trend and the charts are suggesting that bearishness could continue further, at least till the previous support zone. Right? So 2 picks. Now, rather mild bearishness is my short-term view for tomorrow. So bearish chat patterns. The reasons for that is because when you see the charts are bearish, momentum has dropped, and into the bear zones, and trend also is in bear zones, and it is resisting. The momentum also is resisting. The chart price patterns are resisting at the previous resistance zones, and expiry day volatility can, be unpredictable. So 200 may get tested once again if further falls down with a gap down tomorrow. 17,500 also can be seen if the the bull side works fine. So bullish momentum is there in Nifty, so it could work out. That's why it's mild bearish, not full bearish, and it is at a support zone, so it can bounce up. We have already had a decent 7% correction, 12% BANKNIFTY. So there is also a potential that it can move up. So I have a mild bearish, not a moderate to big pure bearish, right? So that's my view, and hope it helps to frame your views. And last paragraph is a repetition of volatility. Towards we are seeing that it is shot up to the 18 levels and then it dipped. Volatility dipped today. So it is wrong what is written here. It shot up today. It dipped today. Volatility, and one speciality of the volatility, this is kind of confirmation that it is between 15 and 19. It has formed a range and it is moving perfectly between this 15-20 range. As long as it does not shoot up above 20, it should be okay. Right? Markets may be choppy, but the range can be analyzed and may help the option sellers. One thing that has happened today is market fall down, and the India weeks also fall down. So this is contra. That may mean that the fall is not clear and there's a chance of bounce back tomorrow. So let's go for volatility. Monthly expiry choppiness will be huge, and then so be cautious to have your stop losses and hedge positions only. Have risk defined strategies always used. Okay? You never use naked calls, never use market stop losses, never place market orders so that slippages are reduced, and current response could always give for personal bets advantage of the wagon. Okay? Always use option strategies like material spreads or anflies or hand corners or current spreads. All of this works, at least in the way that you have a range for your risk defined. Right? But make sure that these strategies are formed after we take a view on the market. Right? How do we take the view is very clear with a detailed analysis that we have done. Hope it helps you. And if you like it, consider hitting the like button and share it to your friends and colleagues with the benefits. We have very low subscriptions, so please help us get the minimal number of subscriptions that could motivate us to keep doing that. Thank you so much. Have a great trading and happy trading and happy learning. Bye.